Good morning, ladies and gentlemen. Welcome to Market Today Television. Today is Tuesday. मंगलवार है तो सब बढ़िया ही होगा. Let us look at how the markets are constructed for us as far as the handover and other proceeds are concerned. There is positive cues coming in from Wall Street. You have a 1 percentage point uptick at the Nasdaq. That essentially means a record high there, followed by what was there on the Dow Jones index. So the cues are positive as far as overseas markets are concerned. Crude oil and US 10-year yield are at manageable levels. Therefore, we see positive cues coming in from Wall Street. What else is moving? Well, there was one bad news which the market adjusted to very well on Monday, which was Friday's disastrous set of numbers as far as second quarter GDP was concerned. The market had a very mature reaction to it, and we ended at the day's high of 24,276 as far as the Nifties was concerned. The overall resistance was at 24,300, which continues. Now, there is another negative news that is coming in, ladies and gentlemen, which is in the form of media reports that the government is looking to increase or actually introduce one more tax slab of 35% in the GST segment. This will be for products such as cigarettes, cold drinks, expensive garments, expensive watches, and of course when it does this kind of things, a couple of stocks remain impacted, which is ITC, India's largest maker of cigarettes, where the tax will now be, this is a recommendation if I may add, and it's on 21st of December that these recommendations might see the light of the day. Keep an eye out on ITC today. VST Industries, the second largest maker of cigarettes, both of them are most likely to see a gap down. More importantly, Varun Beverages, cold drinks are likely to be taxed at 35% now from 28% earlier. Apart from that, expensive garments of above 10,000 rupees will now be taxed higher at 28% versus 18% earlier. And you will see some changes also coming into life insurance, term insurance, as well as cycle makers. These are on the positive side. So if you are a senior citizen and you have medical insurance of below 5 lakh rupees, then the GST on that has been taken out, will be taken out. This is again a recommendation, and therefore companies such as Life Insurance Corporation of India, companies such as HDFC Life, SBI Life, and Max Life will be impacted positively. There is a plan of a GST tax rate cut on cycles. Therefore, TI India, which is Tube Investments, will be in focus. So these are the 5 or 7 stocks that we will look at. Remember, this is a media report and these are in the nature of recommendations from group of ministers, and they will be acted upon, if at all, on December 21st. Now, what does it mean for the market? If, ladies and gentlemen, we have a gap down, and post the gap down the Nifty recovers to close towards its day's high, or actually recovers the gap down, then we know that the market is in a position to absorb bad news and move higher. Remember, I talked about overseas cues. They are positive, so that will be a sentimental benefit for Nifty bulls, as also the fact that around 200 DMA, which the Nifty is at, you see foreign institutional net sales tapering. Just 238 crores on a net level versus a purchase of 3,589 crores by domestic investors. So this is something to be looked at. Let us see how the market reacts. But as far as the Nifty is concerned, if we close in positive territory today, despite this negativity around the GST tax rate on major corporates, then you will see that the 200-day DMA has held and positive cues are coming in. So it's a critical test of the Nifty's resilience, how the bulls are looking at the 200-day DMA, and if we see substantive moves ahead, then one can imagine that the worst is behind us. So 24,300 is something which is acting as a major resistance as far as the Nifty is concerned. If that is broken on the upper side, then you will see higher zones. But today is a range bound trade, support at 24,000, resistance at 24,300, and if either of these levels break, then well, there is a new story to look at. Now, what is the best thing to do? As we've been suggesting since October, try and put in one extra SIP into the market at current levels, and of course look at the Nifty ETF. That is the best thing you can buy. We also have other ETFs and other defense funds that we will be talking about, but overall it will be a stock specific day. The key stocks to watch will be ITC. ITC has a 4 percentage point weightage in the Nifty, as also a very heavy weightage in the Nifty FMCG index and other indices as well. But the Nifty is what matters, and therefore ITC is something that we will keep an eye out on. Mostly a gap down around 200 ADMA, and let us see how bulls take it from then on. That is the story of ITC. TI Industries, this is a very well known blue chip that has given phenomenal multi-bagger returns over the last so many years, so many decades. Keep an eye out on TI India. This is possibly an opportunity to get back into the stock when you see a bit of moves coming in. Mr. Gaurav Dua, Head of Capital Markets Strategy at Shail Bhatnagar, joins us. Good morning to you, Gaurav ji, and a very warm welcome. Yesterday the market digested this GDP numbers with great maturity. Today we have these media reports talking about higher tax rates on products such as expensive clothes, expensive watches, cigarettes and cold drinks. How do you see this potential move trying to derail Nifty bulls, or is this something that the Nifty will take into its stride at 200 DMA?
It's a very good morning to you also, Shailji. It's a new month. We have started on a good note, positive note. And yes, as you said, markets recovering on bad
I think,
news.
Gauravji, you are on mute. I can't hear you.
Hello.
Gauravji, could you please do an audio check with us? Can you hear my voice? Okay. What we'll do is we'll try and get Gaurav again. There is some issue with the connectivity, but meantime, let's look at some other stocks that are going to be in thick demand today, and that's primarily based on data which is from the FNO space, which is both technical and derivative. Let's look at the chart of Voltas. There is heavy activity on the long side yesterday. The stock itself has corrected substantially from a high of 1931, which was seen in late part of September, to yesterday's close of 1721, which was a 4% uptick. Please keep this in mind. As also CDSL, which is a new entrant into the FNO space. Very strong traction in the first series that CDSL has seen. Record highs here, 1665 for you. Please see whether this momentum continues or not, but most likely it will. And Policy Bazaar, because of the changes that have happened in the recommendatory nature of the changes that have happened in medical insurance and life insurance, Policy Bazaar, which is the biggest online platform for selling insurance of all kinds, is most likely to be in thick demand. Yesterday it hit a record high of 2005. Let us see how it reacts. So Policy Bazaar, Voltas, and of course you'll see some movement on the long side in Tech Mahindra as well. The stock rose 2 percentage points yesterday. The charts are pretty good. So we look at Tech Mahindra, Voltas, PB Fintech on the long side, as also a very important stock which is Container Corporation of India, Concor. Look at the chart structure. the stock has corrected from 1170 rupees, which it hit its highest level on June 4th, all the way down to 818. That was about a week ago. And you have 832 as of yesterday. The counter was up 1%. This is India's largest mover of goods on the railway side, and it needs to be kept on your radar at least. Gaurav Dua is back with us. Gauravji, how do you see this recommendatory nature of GST rate hikes on the market impacting sentiment today on Dalal Street?
So yes, luxury part or the premium part of the consumer spending has been doing well, and these kind of measures will actually negatively impact the sentiments there. But yes, if you look at from the government's point of view, they are going to reduce the GST rate of a lot of this entry level and this essential products. So I think the move is to boost the lower end of the consumption, but doing it at the expense of the luxury premium, which is doing well. It could be something which is going to sentimentally hit the market, and that is what we are worried about.
Gaurav, one more question I have in mind. While the government is trying to make luxury and sin products such as cigarettes and cold drinks and expensive watches more expensive, it is also giving a liberal let-off on life insurance products, as also medical and term insurance. There the GST numbers are likely to come down. How do you see that impacting stocks like LIC of India, HDFC Life, SBI Life and Max Life?
So it's been a long time this thing demand from the insurance companies that the premium basically GST on this premium has to come down, especially on the health insurance. Penetration levels are already this thing quite low, and having this thing 12% kind of a tax on the medical insurance or this thing health insurance wasn't this a great idea. So yes, this is a step in the right way, and I think a lot of this positive news was already expected. So yes, you might get a blip on in the insurance stock, but I think bulk of the this positive news is already there in the stocks.
Right. So these are some of the changes that are likely to come into the markets. Please keep an eye out on LIC India and importantly HDFC Life. These are the two largest players in the public and the private space in life insurance. Now, more importantly, we look at two other stocks where brokerage reports have focused upon. One is DLF. You'll see a lot of activity happening on DLF today. UBS has initiated a buy target of 1005 on DLF, as also Prestige Estates at 2175, and remains neutral on Oberoi's but raises the price target to 2230. These three real estate stocks will be in focus, and bear in mind that yesterday's move on the markets was primarily led by realty companies. There is this talk that or just say market rumor that the government might tweak the CRR on the RBI might tweak the CRR rate for the benefit of banks and increase liquidity on December 6th when it meets for its credit policy. Apart from that, HSBC has come out with a buy rating on Aster DM. This is a hospital chain with a price target of 550. It says the merger deal with Blackstone backed entity, which is Quality, will create one of India's three top hospital chains, and that is positive for Aster DM. Bajaj Finance has found favor with HSBC. It has put in a price target of 7740 on this one. Mr. Dua is back. Gauravji, when you look at yesterday's price performance, how do you see the maturity of the market against the backdrop of slowing GDP at about 5.4%. How do you read yesterday's market reaction to this very negative news around 200 DMA?
So markets have this uncanny ability to basically preempt the kind of events, the news flow. So you see, markets were already weak prior to this event, and a lot of times we have seen that markets actually react on a contrary way on the day of the event. So that is what we have seen. But yes, recovering on a bad day, on a bad news, and basically ending close to the high of the day clearly shows that market is showing strength. And if I look at the overall texture of the market, I think after a tough last 2 months, this month is actually going to be very good for the Indian markets. I believe that in large part of this month, foreign investors would be on their Christmas leave, and the selling pressure from the FI is going to ease out, and this will give a long runway to the domestic institutions, domestic investors to make hay when the foreign investors are away. So I think some of the spaces sectors which have fallen very sharply could give very good bounce in this month, and you have already seen sectors like NBFC, cement, and now you're seeing start of a bounce back rally in the metal. So these are the spaces which had bore the brunt of the some pressure from FI selling, and I think these are the spaces which will give you a good technical bounce in this month.
It's just about half a minute left for markets to open, and the gift Nifty Qs are fairly decent, just about a 14-point downtick. Let us see how the Nifty opens in the next 20-25 seconds. And of course, the 3 or 4 stocks that will be watched will be ITC, VST Industries, Varun Beverages, Titan, Raymond, Maneuver, and of course the 4 life insurance plays, plus more importantly Tube Investments. The markets will be upon us in less than a few seconds, and we'll be waiting reaction primarily on ITC, which has a 4 percentage point weightage on the Nifty. Okay, ladies and gentlemen, it's a very strong uptick, 164 points on the Nifty. It takes out its major resistance at 24,300. Let us see how it continues. Okay, ITC first, down 10%. This was more or less expected. 47 rupees lower at 429. This is again a breakdown of 200-day DMA. Let us see how the markets react a little later when they open for trade. HDFC Bank is 45 rupees higher, 1849. TCS is 121 rupees higher. You have Bajaj Finance 76 rupees higher. How about Reliance 13 rupees higher? So it is ITC that is pulling down the index very sharply. Now down just 26 points. It's readjusted. We'll take a very quick detour into the broader markets, look at what VST Industries is doing. ITC is down 4.5%. VST is something that I can't see immediately. Varun Beverages down 1.7%, 621. Let's look at what other prices are moving within the FNO space. As far as prices are concerned, there you see fairly decent activity coming in on Reliance, 1% higher. Trent, which is a cloth maker, should be impacted negatively, although it just makes affordable clothes, but still down 0.4%. HDFC Life, life insurance companies should be in action on the long side. We have 1.2% higher at 646. Let's look at what's happening on TI India. This is a very good stock, 2.3% higher. Remember, the government will also cut GST, when it's raising somewhere, it's going to give some benefit, and cycles are likely to become more affordable. Although the cycles that TI Industries sells, which is BSA and Hercules, are slightly more expensive than the normal ones that you buy. 1.7% higher, 36,600 for you. So this is how the markets have opened up. A strong show on life insurance plays: HDFC Life, LIC of India, Max Life, as also the fourth one was SBI Life. So this is positive, and of course negativity around ITC, but it's also moved fairly decently now, just 2.35% at 466. Overall, the markets have taken this very positively because FI selling is sort of easing out, just a negative 238 crores on 200-day DMA of the Nifty. Gauravji, this is really a very mature reaction coming in from the market as far as the pre-open trades are concerned. How do you see them?
So yes, actually, a lot of things are still not clear. Like, for example, will the slab move from this 28% to 35% plus the cess, or will be only increase in the cess to make it a 35%? So there are these gaps. If it's only the increase in the cess, then the impact on ITC will not be great. Apart from this, some of these stocks that we are talking about, we are just, about 2 months away from the new budget. Anyway, in the last 1 or 2 months on this run up to the budget, these stocks like ITC tend to underperform. So, I'm not very surprised on this. And I think it's a very clear that the impact is going to be short term, and accordingly the markets are reacting.
Like we've said earlier, today's close will be very important. If the market, in its wisdom and its maturity, takes these GST recommendations in its stride and closes in positive territory, ladies and gentlemen, the worst seems to be over as far as markets are concerned. Remember, since yesterday we are tracking the 24,300 Nifty call as far as the long side trade is concerned in the markets. That will now be in the money, and this is something which is really positive, that instead of a gap down, ladies and gentlemen, we have a very decent gap up of about 120 points. Let us see how this move comes in. Remember, when the Nifty hit 24,300, it saw selling pressure from call writers yesterday. Now that has been gapped up. Now the selling pressure will come from 24,400. Nevertheless, but you see this wonderful reaction that the market is coming as far as GST recommendations are concerned. Gauravji, Mirai Asset Sher Khan would have come up with very good research reports on many stocks under its coverage, which have corrected sharply over the last 2 months or so. Any one or two that you can highlight which you are now recommending your clients to buy on the long side after this dip?
So yes, we have been asking our clients for past 1 month and a half to do basically SIP buying into large 5 or 6 names which have fallen from the peak by 15-18% plus. These are State Bank of India, Tata Motors, Reliance Industries. We are also looking at these ITBs. In fact, we have been advising Ultratech. So these are some of the stocks that we thought can be bought in form of SIPs. And so these are the stocks which will, over a year and a half, will give you extremely handsome returns.
Okay, fair point. And we will see a lot of activity that is already coming in as far as frontline counters such as Axis Bank, Bajaj Finance, are concerned. Remember, Bajaj Finance has HSBC has just come up with a report on Bajaj Finance. This is one stock, ladies and gentlemen, that has not moved much in the last 4 or 5 days when the market has reacted positively. Let's look at what Bajaj Finance is doing. Well, nothing at all. Still around 64.89, 66 500. A quick view on Bajaj Finance, Gaurav. What do you see on this one?
So yes, Bajaj is where we have a say buy call. NBFC as a space is actually going through an extremely tough phase. What you have seen in quarter 2 is a spike up in the asset quality issues, and that is why we believe that the larger and better managed player like Bajaj Finance and and Chola Mandalam are likely to do this better in these times, and it is this one of our picks in the NBFC space.
Okay, ladies and gentlemen, the Nifty has settled in pre-open 91 points higher on the index, 24,367. This is a very, very positive and a mature reaction to what is largely a negative news on GST developments. The Nifty Bank is trying to open 250 points higher, 52,350. The IT index is showing a half a percentage point uptick, 43,800, and the Nifty 500, the broadest measure that we track, 922, is likely to open about 90 points higher. Ladies and gentlemen, let's also look at some other stocks which are likely to be in positive demand. Policy Bazaar. Like I had mentioned, this is India's largest online selling platform for insurance of all kinds, and with this proposed cut in GST on life, term and health insurance is likely to have a positive impact. Remember, Policy Bazaar is also now in F&O. This is the first monthly expiry where you see Policy Bazaar figuring actively in the derivatives and F&O space. Gauravji, any view on Policy Bazaar record high 2000? Would you chase this?
So I've been on your shows a lot of time, and I've said within the new age stocks, Policy Bazaar and this is Zomato are the two stocks that we like and we can hold on to, and Policy Bazaar is one stock we are holding for investor in our CPMS. So we do like the stock, and we believe that it is a structural story where investors can actually buy and hold the stock for a long time.
Fair point. Now, most importantly, ladies and gentlemen, when we look at the top 10 super index heavyweight stocks, only one is negative, which is ITC, and even there the reaction is very, very mature, down 2.35% at 11 rupees. At 466, down 11 rupees 20. Remember, this is again the retest of the 200-day DMA on ITC. ITC has a 4.07% weighting on Nifty, and this is something that will define the market today. The rest of the 9 index heavyweights are in the green, led by HDFC Bank, the highest weighted counter, up 18 rupees. How about Reliance, up 7.85 rupees, and Infosys up 7.2. Remember, Nasdaq hit a record high yesterday, so IT stocks of all kinds will be in heavy demand. Let's just look at how Midcap IT has moved. Wipro readjusted on bonus 1:1, 1 percentage point higher. Tech Mahindra is something that I'm tracking on options, 0.8% higher, 1760. HCL Tech, Emphasis, Infosys, L&T, Mindtree, and Persistent all in the green. So ladies and gentlemen, it's a nice start, and remember, we are talking about the maturity of the market. What it is looking at is tapering FI net sales around 200-day DMA, and that is something that it is acting upon on the positive side. It has digested Friday's very negative GDP data. It has digested this recommendatory nature of GST upticks on taxes, and of course the positivity that surrounds the broader market. Gauravji, something that you would want to comment on mid caps and small caps. They are also showing traction. Is this the time to maybe look at one or two of them which your research team has highlighted?
So you had a sharp pullback in mid cap and small cap in October, November, and from last couple of weeks they have bounced back good. And as I said, most of the mid caps which have fallen sharply will do well, be it the railway stocks, defense, or even from NBFC or steel and and this thing metal. So you can have your pick from there. But my word of caution here would be that this month, as I said, is likely to be good for the markets and even better for mid cap and small cap. But this year end rally would be the last opportunity to reduce your exposure to small caps, micro caps. Year 2025, according to us, will not be great for small cap stocks, micro cap stocks. And I have a whole this thing theory about it. If we have time sometime, we can talk about it.
Okay, fair point. Please elaborate.
So, I see similarities between 2018 and 2025, where, consumption is slowing down, economy is slowing down, NBFCs are having issues. Your small cap index is trading at around 50% premium to the large cap index on a trailing basis. So that is the similarities within the domestic space. Now, if you come to the global environment, if you remember in 2018, the Trump this administration in its term one had levied tariffs on this thing China and started a this thing trade war, which had led to a depreciation of yuan by around 12 to 14%. That was the China's response to mitigate the impact of the levy of this thing tariffs by US. And in response to that, or in fallout to that, RBI also had to let the rupee go down, depreciate. Rupee went from around 64, 65 level to around 73, 74 level. And all this difficult domestic and global macro environment led to a very, very sharp sell-off of more than a year in small caps, micro caps. If you remember in 2018, Nifty Sensex were down marginally by around 4 to 5%. They stayed in the range, whereas the small cap index slipped by 25% plus, and a lot of your individual small cap, micro cap stocks were down by 30, 40, 50, 60% also. So I'll not be surprised if we have similar kind of a play out in the equity market in 2025, because here again the domestic environment is the same. Interest rate cuts which were expected are likely to be at a very, very slow pace. Again, Trump is trying to initiate this trade war. So we could actually see the same thing in this year of 2025.
Right, ladies and gentlemen, the markets are upon us. Nifty opens in positive territory, 53 points higher. The Nifty Bank is 231 points higher. IT and 500 have also opened in the green. Let's look at the most critical stock today. A very mature reaction on ITC, ladies and gentlemen, 9 rupees 40 lower only at 467. It's retesting 200-day DMA. This will be a very important day for ITC. If it closes above 200-day DMA, then it would have digested this recommendatory nature of taxes. Let's look at the NSE 500 for a moment. You have Varun Beverages down 2.3%, 618. These are reactions coming to host as far as prices are concerned. Let us see what is happening in LIC of India. LIC is trading at the moment up 0.7%, 991. Let's look at HDFC Life, and you have HDFC Life flat at 641. How about SBI Life? This is something that needs to be watched. Positive 0.4% higher. Let's look at Raymond. This will react most probably negatively. Raymond down 0.5%, 1616. This is India's largest chain of quality fabrics which are priced above 1,500 rupees and also above 10,000 rupees. Let's look at Manyavar. This is also a product that will react negatively, down 3.4%, 1385. How about Tube Investments, TI India? This is a stock that should be in positive territory. Yes, 1.7% higher, 3602. And this is a positive news coming in on TI Industries that the government will tweak cycle GST to a low people who want to buy cycles. So TI Industries on the positive side, and of course the remainder which is on the LIC, on the life insurance space, that is doing pretty well. The Nifty now just 35 points higher, 24,310. Let's look at some stocks that are doing positively as far as NSE 500 is concerned. 4 percentage point uptick on Cochin Shipyard. Yesterday's 5% rally, 1725. What is doing good is Policy Bazaar, 2 percentage points higher, 1988. You have a strong move coming into Inox Wind after yesterday's 7% uptick, up 5.7% again. Torrent Power has a QIP slated, the counter up about 3%. Let's look at the most active counters. At the moment, we have Adani Green 1.2% higher, but Varun Beverages sort of taking it very, very negatively, 3 percentage points down. The GST Council, in its recommendations to the government, has said that taxes on cold drinks should be raised to 35% from 28% now, and that's the negativity that you see. Gaurav is still with us. Gaurav, a quick view on the renewable space. Fresh rally starting on Inox Wind, Inox Green, Suzlon in particular. Anything that catches your fancy in this space?
So yes, we are more inclined towards the stocks which are in this wind power. Suzlon is one stock that we've been holding in our fund for our clients in PMS. Inox Wind also we like, and we believe that's where there is some valuation comfort. Whereas on the solar side, we believe a lot of stocks are valuations is where we are not very comfortable. So I think we'll stick to the wind power related stocks.
Fair point. That's not an issue at all. What else catches your attention in the market open that is just in front of us?
So yes, as I said, this is going to be a great day or a great month for small cap, micro caps, and you see a lot of these stocks which have fallen down up by 4 or 5%. Especially I see in the textile space, exporters of this thing garments, be it Arvind or be it this Himmat Singh Kashnaid, Gokuldas. So that's a space I think is this looking good to us, and structurally also I feel these stocks will do well.
Fair point. Welcoming Mr. Rudra Murthy from Vachna Investments to join us. He's the research head there. Good morning to you, Mr. Rudra Murthy. Your reaction to how the markets have sort of held the 200-day DMA on the Nifty and are showing traction on the Nifty bank. The Nifty now just up 20 points.
Kailash, market definitely looks for me now a buy on dip market. I understand last 2 months of complete valuation concerns which were there, and we also saw a lot of correction which happened not only in large cap but also in good mid and small cap stocks where valuation was a concern. And now there is a clear demarcation between companies where there is growth, where there is clarity of earnings, and companies where things have just moved in terms of price where the fundamental backup is not there. And also we have seen at macro level, whether it is geopolitical tensions, whether it is the elections in US, whether it is interest rate, whether it is crude oil price movement, all these have now settled. And we have also seen in India, whether it was Maharashtra election outcomes and everything, whatever was happening around. But right now I feel on chart, market has now turned from sell on rise to a buy on dip market. And for me to have this theme or thesis, I will first of all say market has to stay clearly above 23,800. So till we stay above this level of 23,800, I will say market is still a buy on dip. But only thing is when you buy right now, still I see comfort in large cap than going into mid and small cap. And you have to be very sector specific and stock specific in this market right now. For example, banking for me looks very, very attractive even here. And look at HDFC Bank, look at ICICI Bank, look at SBI. So for me, whether it is private bank or public bank, both look attractive. And in fact, let me tell you, Shailesh, that except for Indus India Bank, all the banks which came out with results more or less was good. And in last 2 months, even technically, if you see, there are only few stocks which are above the lows which it made in this last 2 months. So that means the price as of today for HDFC Bank, and take the price 2 months back and see all the correction, whatever happened in market, relatively still HDFC Bank is much stronger, and relatively HDFC Bank's price today is above the correction prices in Nifty. Nifty from 26,200 corrected to 23,200. That was a 3,000 point correction in Nifty. But if you see in the same period, what was HDFC Bank? Nifty was at 26,200, and what was HDFC Bank now? So even after 2,500 point kind of a correction in Nifty, HDFC Bank is higher than where it was 2 months back. So these are examples of finding good stocks and good sector. Same with even ICICI Bank, same with even SBI. So whether it is fundamental or it is technical, there are easy clues with which you can find out and be in the right sector and stock. And similarly, I can talk after banks. Look at even IT as a sector. Most of the IT company, even though last quarter 75% of companies disappointed both in terms of top line and bottom line. No doubt stock prices are always slaves of earnings, and if you don't have that earnings and if there is disappointment on top line and bottom line, definitely market has to correct. It's a matter of time. But then identify in last quarter which were all the sectors and stocks where results were better. There was that 25% where results were better. In that camp, I will put IT as a sector. So for me, IT, most of the stocks, starting from Wipro, Tech Mahindra, Infosys, TCS, everyone came with better results compared to the overall lot, and they were better than expectation. So for me, if you have a time period of 1 to 2 years at least, pick stocks from IT. Look at Wipro, look at Tech Mahindra, look at Persistent System, fabulous result. So I will pick these stocks from the sector. So I spoke about banks, I spoke about the IT.
Right, Mr. Rudramurthy, I'll request you to kindly limit your answer to about 45 seconds. The market is sticking really strongly in the early trades. At the moment, 24,300 is being tested, 33 points higher on the Nifty. Let's look at what the contributory stocks are as far as the Nifty is concerned on the long and the short side. Obviously, there are players that are adding to this change, but look at how the advanced decline has moved dramatically in favor of bulls. 1773 stocks are in the green versus 428 that are in the red. Business Today tracks 19 indices for you, 16 of them are in gains, and only 2, which is the pharma and the IT index, are marginally down. You have a strong show coming on the Nifty. PSU Bank 1.44% higher, 6898. The metals, the realty, and the small cap and the mid cap indices are also in positive territory. Gauravji, your question coming to you. What is the likelihood that in on December 6th, the RBI might tweak the CRR to benefit banks. It might not cut interest rates, but it might reduce the CRR ratio to inject fresh liquidity into the market. What is your view?
Normally before the last quarter of the financial year, which is the busy season, RBI does take steps to infuse some this thing liquidity into the system. Anyway, the first 2 weeks you will see this thing, advanced tax payments. So yeah, I will not be surprised if some action is taken in terms of providing liquidity support in the this thing banking system. But the chances of an interest rate cut, I think, is very limited in this present environment. Rupee already we have seen is under pressure and have gone from around 84 to now 84.7, and a hasty interest rate cut at this point will put further this pressure on the rupee.
Fair point. Thank you so much, Gaurav, for joining us on this wonderful Tuesday morning. Here's wishing you all the best, and Merry Christmas and Happy New Year in advance. Let's hope, as you say, December turns out to be a Santa rally, something that the market sorely needs after 2 months of correction. Thank you, Gaurav. Okay, ladies and gentlemen, let's proceed further. 9:28. The Nifty is now testing 24,300. Let us see how it goes. But for the moment, the action is in banks. The Nifty banking index 271 points higher, 52,375. And the top performing index today is the Nifty PSU banking index. As I have been telling you since afternoon yesterday, that the market is actually pricing a CRR cut by the RBI to inject fresh liquidity in a market, in an economy that sorely needs bank credit. Coming to you, Mr. Rudramurthy, anything in the banking space that you might find favor on the long side? What looks good, sir?
As I've already discussed now, I like HDFC Bank and ICICI from private bank, and from PSUs, I like SBI.
Fair point. Any price targets that you would have on SBI?
See, SBI for a positional target of, let us say, if someone can roll it over in future and keep it along and wait for the next quarterly result, a time period of at least 2 to 3 months from now on, I won't be surprised to see the stock closer to 4-digit. 950 to 1000 rupee on SBI is possible, and for this long call, I will be keeping a strict stop loss closer to 810.
Fair point. And any view that you would have on Container Corporation of India? This is a stock that has superb quality and now showing fairly strong traction both in F&O and cash markets.
No doubt Concor is a good stock, but if you see the trend for very short term from levels closer to that 1150, stock has definitely seen a good profit booking. It has seen a good correction to levels closer to that 760, 770 zone. Now for very short term, there will be a resistance which it will face at around 865 to 870. But once it crosses 870, yes, a further up move can be seen. So if you are long currently on Container Corp, so keep a stop loss somewhere closer to these levels of 800 and wait for this stock to move beyond 870. Then you will see some momentum coming in the stock, and furthermore up move can be seen in Concor. So yes, for very, very short term, I am seeing some bounce possible in Concor, but a decisive momentum move on the upside will come only once it crosses 870.
Okay, let's for a moment pay attention to what's happening in the F&O space. Which are the gainers? KPIT Tech, 4.4% higher. I'll request Mr. Murthy to keep the chart ready. We'll come to him on KPIT Technologies. For the moment, this is the top gainer as far as the F&O space is concerned. Union Bank, 3.7% higher. Manappuram Finance, 3.6% higher. And you have a strong move which is coming into CESE, and Jindal Stainless Limited. Remember, Jindal Stainless is also a new entrant that has joined the F&O space in the month of December. KPIT Technologies, Mr. Rudramurthy, what are the charts telling you?
See, for me, as of today, if you see the move for pure intraday and if you are an intraday trader, yes, you can look at a dip and then buy it into. And if you are even a small trader for a 2 to 3 day kind of a time horizon, yes, I will say go ahead and buy KPIT. You might find targets of 1430, 1450 on KPIT. But however, if you are a positional trader and if you want to see overall chart pattern and how the stock has moved, if you see, for me, KPIT has seen a single straight line correction from levels closer to 1800. Stock fell to levels closer to 1300, and this is the period when you see even other stocks. For example, I want to compare the same period, how Infosys has done, how Wipro has done, how Tech Mahindra has done during the same time frame. I will say Tech Mahindra for me is a better pick than KPIT, or for me even Wipro will be a better pick. So it's a question of what is your time frame and what is the horizon for which you want to take a position. So KPIT can give a bounce, having seen such a selling from those higher levels of 1400 plus what you have seen. Currently, yes, you might buy it for a 2-3 day kind of a horizon. From this 1400, it can see a bounce, because from 1900 we have seen the fall to levels closer to the 1300. So I won't rule out a bounce now. It can even go up to 1510. And only once it decisively closes above 1510, 520 level, we might see further up move. So it is just a retracement of the profit booking what we have seen in KPIT Tech, which is happening now. But if you want to take a positional view and slightly a longer time frame, I will still prefer from IT, Wipro and Tech Mahindra.
Fair point. And KPIT, as we've pointed out earlier, has corrected fairly sharply from a high of about 1928, which was there on 12th of July, to a low of 1298 last week. So that's a fairly steep 32-33% correction, and today's move has taken it above 21 EMA. That, ladies and gentlemen, is a very positive development. What else is moving in strength? Let's look at the winners for the moment. 24,300 on the Nifty is where the bears are battling it out with the bulls. Keep an eye out on the Nifty 24,300 call, which is expiring on 26th of December. At the moment, it's priced at somewhere like 408 rupees. Remember, we picked it up yesterday as far as the options radar is concerned. What else is moving? Let's look at strength, which is coming in. CESE 5.7% higher, 187. Mr. Murthy will keep the chart and his view ready on CESE while I mic some other stocks. We've been looking at KPIT already. Manappuram Finance is something that I've been tracking since that RBI norm came into impact at about 135. The counter is now at 161. A quick view on CESE and Manappuram Finance, Mr. Murthy.
Yeah, when it comes to CESE, I say yes, the chart patterns are good. Right now, stock is consolidating, and last 2 days we have seen some price action supported by volume. So I will be a definite buyer in CESE at current level. Keep a stop loss closer to 169, 170, and I won't be surprised that this stock will break the all-time high and move towards that levels of around 210. And once it crosses 210, you will see further up move in CESE. A definite good stock to buy at current market price and hold on if you have long positions in CESE. When it comes to Manappuram, yes, we had a lot of fundamental changes and news flows around, and we saw even a steep correction in Manappuram from levels closer to that 200 plus 220. You saw stock correcting as low as 140 rupees, and that was a steep correction of 30% plus. But right now I'm very clear, Manappuram should cross 165 for me to confirm that yes, the down move is already over in Manappuram and you will see a fresh up move and the selling is all done. For that, you have to see Manappuram crossing 165. But for very short term, yes, it's a positive news, and that news flow is taking the stock price up. But for momentum and for a bit longer time frame, I want the stock to go above 165. And also, Shailendra, we have a news floating in market that yes, Manappuram might be a takeover candidate, and it might be the promoter of Manappuram might give a stake to some other big fellow. So this news is also making for very short term Manappuram to move up. But I will say, if you have Manappuram, look at exit closer to that 164, 165 level. Once it gives you a clear breakout above that 165 and you see a closing above 165 in Manappuram, then yes, I can confirm and say that the down move is over, and yes, a fresh momentum on the upside can be seen. So 165 is the zone above which it should start trading, and close above that for me to give a right buy view on Manappuram.
Fair point. This is what is coming in. Let's look at the price action on Varun Beverages, ladies and gentlemen. The stock is obviously one of the worst impacted when it comes to the proposed changes in the GST tax structure. But look at how sensibly the market is looking at it. The low was 598, and at the moment it is at 620. Still down 2%, but let us see how it reacts. Remember, the recommendatory nature of these GST changes towards 35% from 28% will be discussed at length at December 21st. But between then and now, let us see how the markets react. Remember, cold drinks, again, just like cigarettes, are something of an addictive thing. If you like a cold drink, you will continue to have it. No matter what the tax structure is. Maybe this is what the market is betting on. Over a long period of time, Varun Beverages has been one of those fantastic wealth creators that has given supernormal invest returns to its long-term shareholders. Around 200-day DMA today, and sort of the dip is getting purchased into. What else is moving in the market? Swiggy, 4% higher, digit change, 513. This is the internet space that is doing pretty well. Cochin Shipbuilders, 2.8% higher, 1703. NTPC, the newly listed entity from NTPC, I'm talking about NTPC Green, 7.6% higher, 139. And of course, a strong move coming into Adani Ports, 3 percentage points higher, 1252. The Nifty holding 24,300. Therefore, keep the Nifty December 26, 24,300 call at about 408, 410 in front of you. Mr. Rudramurthy, anything that catches your attention? We've had about 20 minutes of trade so far. What looks good?
See, for me, one, if you are looking for pure intraday, yes, we talked about SBI, see the way stock is moving. We spoke about HDFC Bank, again, that is doing good. So I will buy some of these banking stocks. But if you give me a permission to continue, that you want to continue holding the stock and it is just not for a days or a 2-3 day kind of a time frame, and I want to take a positional long call, I will find a lot of stocks where results were good and price movement was also positive. Look at, for example, Federal Bank. Yes, last quarter results, if you see, it was very good. Chart patterns are good. Yesterday it gave you a correction and profit booking, and anything at current market price on dips to 200, I will be a buyer in Federal Bank. Buy at current market price. Any dips on Federal Bank is a buying opportunity and it will do good. Similarly, I can name so many stocks. Look at Ramco Cement. Again, for me, this stock gave fantastic results, and for me, prices are definitely doing good in a relatively bad market in last 2 months. And similarly, look at even Piramel Enterprise, PEL. Similarly, look at some of these stocks like Wipro and Tech Mahindra, which I mentioned. So for me, even pharma is a good theme. Look at stocks like Laurus Lab. Look at stocks like Inpharma Lupin. They can do good even from current market price. For me, Lupin looks very, very strong. So you have to pick and choose sectors. You have to pick and choose stocks, and then you have to take positions in the market. I can even tell you HAL. Look at HAL for me at current market price also, it offers a mouth-watering buy. So you have to be very specific in this market in terms of sector and stock. And I like private banks and public banks at the top of my list, which includes HDFC, ICICI and SBI. And if you want to pick a mid-cap bank, I will look at Federal Bank, which is good. I look at even CUB, City Union Bank, that also looks good. Move to IT as a sector, I have named Tech Mahindra, Wipro, Persistent System. They all look good for me. And if you want to pick results where the quarterly results were good and the stock can do even good from here on, look at stocks like Pyramid Enterprises, Indian Hotel, Ramco Cements, and some of these names which I'm giving you now looks good. And as I have also named some of these mid caps, if you want to buy, you have to also look at valuation as a comfort before buying those mid cap. For me, NIIT Limited, one of the mid cap stock, looks very, very attractive. Look at the chart pattern. Look at also their last quarterly results. It was really good. Dishman Carbogen or Dishman Pharma is another stock which is a big turnaround story for me from current level. Look at even Stovecraft, looks very, very attractive. So look at Genesis International. Even today it is giving a fabulous move. So you have to be very, very stock specific if you are looking at mid and small cap, and you have to be in that place where valuation comfort is there even at current market price. And when it comes to large cap, I've given a lot of sectors and stock names there, and I will still prefer in general large cap than mid and small cap at current market price.
Right. So that's the view that is coming in from Mr. Rudramurthy. Let's look at again the market for the moment, and we'll go top down. The broader sentiment on Dalal Street is improving further. 1884 shares are in the green versus 371 that are in the red. At the moment, it's a clear bull rule that is happening on Dalal Street. Out of 19 indices, 18 are in the green. The lone index which is in the red is FMCG, and that's because of ITC, where the weightage in the FMCG index is phenomenal. ITC has withstood the selling pressure. It has not gone down below its opening low level, and now just 11 rupees lower at 466. What are the top performing indices? Nifty PSU Banking Index 2.2% higher, an advance of 12 stocks out of 12. So that's a big win. Look at the advance decline ratio in NSE 500. 400 shares are in the green, only 99 in the red. That's a very big plus. Look at the Nifty small cap index, up 1% out of 100. 85 shares are in the green. Look at the Nifty mid cap index, up 0.6% out of 100. 78 stocks are in the green. Taking it away, ladies and gentlemen, is CESE 187, up up 5.7%. Let me just see what the chart is. Although Mr. Rudramurthy has already talked about it. All-time high is 212, which we saw on 26 September. It is now gunning at 188, 187. Okay. So two stocks that you need to keep an eye out are KPIT, and Birlasoft also moves in sync with KPIT. Birlasoft for the moment is 606. It's up 9.5 rupees, and again it's corrected fairly sharply from the all-time high of 857. The correction was somewhere to the tune of about, let me get you this percentage. Okay, I'll let you know a little later. A view on Birlasoft, Mr. Murthy?
Very, very clear, Shailendra. The stock made that good correction and profit booking was seen from those levels of around 750. Stock made a low towards 540, 550 zone. Now for me, the chart patterns are looking really good, strong, and you can see a base formation, and now stock is moving higher. And I'll be very, very clear. There is a resistance for this stock somewhere closer to the 608, 610 zone. At current market price of 607, you are buying it right at the resistance. Rather, what I will do is I will wait for a break above 610. The moment you see Birlasoft closing above 610, not intraday, but I want a close above 610. The moment I see a closing price above 610 on Birlasoft, go ahead and buy Birlasoft. You will see a price target of 680, 690 to come, and one can have a stop loss for this long call above 610, somewhere closer to 585. So I'm very clear, buy above 610, keep a stop loss of 585. and look at targets of 680 to 690.
Okay, that's a wonderful description of Birlasoft. Anything else that catches your attention in the market between the time it has opened and now? How about Titan? Titan should also be impacted with this rise in the proposed rise in prices of watches, but it's always corrected sharply. A view on Titan, Mr. Rudramurthy?
Shailendra, very, very clear. There are few stocks because of valuation concern, I may not buy them. And in this market, last 2 months, they were all butchered. Valuation where people were buying left, right, and center, ignoring valuation just because company is great. Yes, people lost money. But then I cannot say Titan has never been a wealth creator at all. That will be a biggest mistake if I do that. What I can tell you is, yes, if you have a very long time frame, and you want to have a stock in your portfolio which you don't want to sell anytime, buy these type of great companies when you see correction. But for me, Titan has seen good correction, and if you even see last quarter results, it was not up to the mark, it was below expectation, and in fact that was one of the reason why the stock also had good healthy correction. And now you have this GST proposed increase news, which is also making a lot of other stocks which are into the high luxury segment category getting some amount of decent correction. So if you want to buy it for your portfolio and hold on forever kind of a stock, then yes, you might accumulate it on every dip, or else even at current level after this kind of a correction, I still have a concern because of valuation.
Okay, that's how it is at the moment. Slowly but surely, the 24,300 level is now emerging as a strong support. Remember, this was a resistance yesterday. The market had fallen from 24,300, but now it seems, at least in the first half an hour of trade, that 24,300 is something which is now with the Nifty bulls at a time when the broader market sentiment is extremely positive. So indices might not be doing well, but the Nifty Bank is up 370 points. Remember, the PSU banking rally is up and running. Remember, on December 6th, you have the RBI credit policy, and there is this view emerging in the market that a CRR cut might be in the offing. Now, let's look at some top performers that are there in the first half an hour of trade. You have Indian Bank, 12% higher. Wow, when was the last time I saw that? 49.88. NTPC Green we've already marked. You have paper stocks such as Quantum, up 8% at 128. What are the other names that I can take on air? HEG and Graphite. These are maker of electric arc electrodes that are used to melt steel scrap. Both of them have shown smart gains, 9% higher on HEG, 478, and 6.6% higher on Graphite India, 557. KPIT CASE we've already discussed. Any other stock that I would like to mark on air? Yes, Electro Steel Castings. This is at 161, up 5.4%. I am giving these names to you simply because the volume is also pretty high along with the gains that we see. What else? There is a correction that's happening on Indegene. This is a very, very well-known stock, but this seems to be earnings led. Let me see what Indegene is telling us. Indegene, this is now testing its 100-day moving average at 625. It's a fairly strong volume of 1100 crores, down 6%. So keep this also on your radar. But Swiggy and NTPC from the IPO space are doing fairly well. 951, ladies and gentlemen, and Varun Beverages is the 6th most active trading counter, 621. About 345 crores worth of shares have been traded. ITC, let's get Mr. Rudramurthy now in the conversation. The first half an hour has lapsed, and the counter is at 200-day DMA. Mr. Rudramurthy, what would you see as the market's reaction to this very negative news on GST and how the stock has reacted? What is your view on ITC?
See, Shailander, very clear when it comes to a positional view on ITC, I will strictly hold it with a stop loss of around 450. So if you are a very short-term trader taking positions in F&O, 450 should be the stop loss, and that's a crucial short-term support for ITC at current market price. So first of all, you have to see what is the downside from current market price, and below 450 as a short-term trader, I will exit if I have long position. But definitely today dip is a buying opportunity in ITC. Already intraday you are seeing that kind of a buying which has come in ITC, and similar stuff we saw in few other good stocks, where because of this one day news kind of a correction what you saw, whether it is Varun Beverages or few other names similar to that, good companies have to be bought in these kinds of bad news where people think everything is done and dusted and they start selling them. So for me, ITC is a buy. Intraday, I still see some more recovery possible in this stock in spite of the negative news which was there. But as a positional trader, I will have a strict stop loss at 450 and hold on to my long position.
Okay, that's a very sensible view that is coming in. Let's look at what's happening on prices. Well, nothing much to talk about except for K Fintech and many other stocks that are moving in positive territory. What would I want to highlight to you? Okay, we are now at 953. HEG now 10% higher. Let's get Mr. Rudramurthy in. Remember, steel is also moving in sync with the possibility of a CRR cut. 481, it's already up 10%. I hesitate to ask you, Mr. Rudramurthy, but HEG, would you want to comment on this? Very strong volume and a better price action on price.
Shailandra, thanks for asking me this beautiful question. I will not hesitate buying a stock just because it is up 10%, or other way around, I will not hesitate to sell a stock just because it is down 50% in last 2-3 days. I'll give you an example. First, let us look at HEG. If you see on chart, there is a breakout at 465. And today, the price action, the volume, everything confirms to me that this break is good. So for me, tomorrow you might see some dip to levels closer to 465, because today you have seen a 10% move. Tomorrow there might be some profit booking. I will buy HEG and I will look at accumulating it more. You want to buy it at current market price even after a 10% move. How does it matter? If I'm having a target of 600, doesn't matter whether I buy at 485 or I buy at, let us say, 450, unless I have a higher target or a bigger target. I'm not looking at intraday to buy HEG book after 1-2% up move from here. So HEG at current market price is a buy. On dips to 465, it will look attractive and it is a buy. Now, don't hesitate to buy a good stock just because it is up 10%. Buy it here or buy tomorrow once you see some correction. You want to buy 100 share, buy 50 share right now. And if you get it tomorrow closer to 465, buy some more, hold it and look at targets of, at least I see this stock moving to those previous high zones which it has made at around 550, and even from there it can go further up. But look at few other names. For example, I was talking about Honasa Consumer. This stock was at 540, and I was repeatedly telling when Sakshi was there in the show and she was asking me the question, I said at 540 Honasa, for me valuation was a big concern. And Honasa Consumer from 540 corrected to levels of 250. That means stock fell 60% from the top. Now people ask, Rudra, after 60% correction, is Honasa attractive? My answer is no. Because even after 60% correction, the stock is having PE multiple of 80-100 times after a 60% correction. So I don't want to buy a stock where valuation is a big concern, however great the company is. Bhav Bhagwan hai, and price is very, very important, both technically and fundamentally, because I want margin of safety, whether you are fundamentally looking at it or you are looking at it technically. So for me, Honasa, even after a 50-60% correction, I will not buy. But for example, HEG, even after a 10% up move, it looks attractive for me and I might buy it even now. So one has to understand, don't buy a stock just because it is down 60%, or don't ignore or don't decide not to buy a stock just because it is up 10%.
Right, ladies and gentlemen, 9:57. Thank you, Mr. Rudramurthy, for these wonderful conversations on quality stocks that are moving strongly on the technical plane. Ladies and gentlemen, it's been a very mature reaction by the market. 24,300 has held for the bulls when it comes to the negativity surrounding GST recommendations, especially on the cigarette, the cold drink, and of course the expensive garments and watches space. Apart from that, you've seen very strong traction coming into quality steel stocks, quality steel ancillaries. There is a massive run up on PSU banking stocks. So two broader themes are running in the market. Around 200-day DMA, the FII selling has tapered off, which essentially means that the market is showing strength and resilience. Banking stocks are doing very well on expectations that there might be a CRR cut on Friday by the Reserve Bank of India in its credit policy, and you will have lower borrowing costs. With that in mind, realty, cement and steel stocks are also going up. With that, ladies and gentlemen, we'll call it a day on this show, but remain glued to Business Today Television for all that is happening in the markets and on the other side of this break. Thank you for joining me.
The world today yearns for each one of these as we are grappling with the problems and looking for a future where we can all benefit and leave behind a better world for the next generation. When we look at the shared future, very clearly we all have responsibilities towards the environment, towards sustainability, but most of the countries on this platform are countries which are not the reason for the problem in the very first place. The damage to the environment was not caused by the global south or by the less developed or developing countries, but more by the developed countries which enjoyed the fruits of low-cost energy to develop their economies into large per capita economies. And therefore,